Hello, good weekend, Maverick traders. This is Rob Reinhold. I'm here with Mr. Ankit Sharma, and this is the Currency Room. We're going into the third week of May here. And look, the markets have been flattish. We're starting to see maybe some changes, but we've been pretty clear here that the equities are going nowhere. And that's exactly what happened this week. Equities basically went nowhere. We're still in a range. We'll take a look at the charts. One of the things we did see is we did see a significantly stronger US dollar. Now, this was the biggest gain since September 22. We don't know if it's going to have any follow through, but the dollar had been just drifting lower for the last couple months. And this week we got a big jump higher. So we'll take a look at the charts on the dollar. Things may have changed there. We need a little bit more confirmation. But overall, we see a little bit of a risk-off move this week. So when you take a look at all of the asset classes, equities did go down a little bit, dollar did go higher, yen did go higher, cryptos rolled over, and they look really awful right now. At this point, I think you got to take a look at this market saying, okay, it's slightly risk-off at the moment. We've been slightly risk-on for the last 3 weeks. I think this week it's kind of shifted to be a little bit more pessimistic than it was before. If we take a look at the economic numbers this week, the big news was the CPI. US CPI comes out, and in the beginning, it was taken as good news. People cheered it. They say, oh my goodness, look at that. Year over year CPI was supposed to be 5%. It's 4.9. The monthly number came in right as expected, and the core actually came in a little bit hotter. We got a little bit of a pop from that, and then people started to think about the numbers, and it continued to slide away, and people started to get a little bit more pessimistic. We did hear from one central bank. We heard from the Bank of England. They raised rates 25 basis points as expected. Everything was expected, but the pound actually weakened a bit on the news, just a little bit, nothing substantial. The only other notable thing we got was US PPI, producer prices, and those were better than expected. So we are starting to see inflation come down, not quickly, but it's coming down. A lot of the economic numbers have been coming down. The question is, are they going to come down so far that it causes us to be in a recession? Or is it going to be what's called a soft landing, where the Fed slow the economy down just enough to take care of inflation, but not go into recession? One other thing to note, on Friday, we got GDP out of the UK. It was ugly. It was definitely weaker than expected. Seems like the UK economy just cannot get its foothold at all this week. So as I said, I feel like over the last 3 to 4 weeks, we've been slightly positive in the outlook and the sentiment. And this week, I feel like it's shifted a little bit. Ankit, would you agree with that we shifted a little bit from being slightly optimistic to looking more slightly pessimistic?
Yeah, I mean, I agree. I mean, this is the week where we have seen sort of a two picture. Like the early part of the week was a lot different than the second half of the week. And we can see that not only just in the equity markets, but it's also reflected in the currency market. It's also reflected in the metals. So I think this could be a little precursor of a change. And as a trader, we always need to know where's the inflection point and at what point we need to make a change to our outlook. And I think this is the week where we need to really look into next week and see where what kind of follow-throughs we get. So I definitely like certain charts here. I'm noticing a change here. I think the biggest question is, would this movement would carry on into the next week? And I think that's where will be the next big trade. But definitely something to consider this week.
Ultimately, we are still in the sideways trend, and we'll take a look at the S&P. But you can see real quickly here, everything went down. We had the S&P down, world index down, cryptos down, gold down, oil down. It was a slightly weaker risk-off week. That being said, take a look at where we are. We were in the top third of this range on the S&P. Now we're closer to the middle. So I don't want everyone to get so overwhelmed by what happened just on Friday, the last couple of days. When you take a big step back, you see, okay, this is where we are. We might, and I think we even go down and touch the bottom of this range at 40.60. So I'm going into this next week thinking, okay, we're still sideways, but we're probably going to the bottom of the range at this point. So I'm looking at going a little bit to the bearish side over the next couple days here. We take a look at the performance. Here's that dollar we talked about, 1.3%. And that really came the last 2 days of the week. Really came after that CPI, after people sat there and thought about it for a little bit. They realized it wasn't a dovish number that they initially thought. We liked both the Aussie and Kiwi short, and you can see that those performed really nicely. We made a call that the European currencies, they had run a lot over the past month, and we were really jumping on that trade. It worked really well. Last week we said, hey, that trade is done. So European currencies, it looks like they're out of gas. And remember, in currencies, the money has to go somewhere. So if money comes out of the euro and pound and Swiss franc, which was a really hot trade over the last month and a half, it's got to go somewhere. Well, where did it go? You can see the dollar and the yen were the beneficiaries this week. It did not go into crypto, that's for sure. Crypto, nasty week. And we think cryptos are broken at this point. We don't like any long in cryptos here. We'll take a look at the chart here in just a second. So let's take a look forward here. We just looked at the S&P. We talked about how we're likely headed down to the lower end of the range. I want to take a look here at the dollar index. This is the DXY, the dollar index. Now, this is not equally weighted. We like to take a look at the dollar in our basket that is equally weighted. It means that all the other currencies have equal weights against it. The DXY is not equally weighted. The DXY is weighted mostly euro dollar. I think about 44% right now is what is euro dollar. So this is mostly euro dollar with a couple other currencies sprinkled in. But you can see here, we have a major trend change potentially brewing. All the way since March, we have simply been stair-stepping down. Fall, bear rally, fall, low base, fall, bear rally, fall, bear rally. Now you can see we've stopped going lower, and now we are showing that we are potentially making a major trend change. Now, what is it going to take for me to come on and say this was a major trend change? I want to see a pullback to a higher low and a nice rebound. At that point, I am going to come out and say, hey, that was a turn in dollar. That was a major trend change, and we now need to be more long dollar than short dollar. As you can see, a couple more candles on the daily chart, and I'm right there. So I am no longer looking to be short dollar. I think it's a little premature to be long dollar, but I'm just waiting a couple days for a nice signal on that dollar to show me that, hey, it's now on the way up. And here are cryptos, and you can see they have just broken every single technical indicator. There's nothing good about this chart. There's nothing good. Could we go back down and retest those March lows? It's very possible. Very possible that we could go back and retouch March lows. There's not a lot of support here. So the cryptos, we do not like them in any way, shape, or form. Let's take a look at the calendar next week. So next week we've got Empire Manufacturing out of the US. These are the region manufacturing numbers. These have been weakening quite a bit. I don't think that one's really going to be that big of a deal. Probably on this calendar, the biggest deal is either going to be Canadian CPI on Tuesday, or I think that Aussie employment report on Wednesday looks intriguing as well. Now, before we just jump off this calendar, I want to point out the last thing, Friday. Chairman Powell speaks. We have not heard from Chairman Powell since the Fed meeting, which was about 10 days ago. So look, this isn't going to be super fresh, but there's been enough that has changed over the past 10 days. We might get some updated guidance from Chairman Powell. So this week, we think equity markets likely to remain range-bound, but I think we're going to trade down to the lower end of the band. So the first part of the week, I'm definitely going in at a more risk-off. And then economic reports, that Canadian CPI and Wednesday Aussie employment report looks to be where the fireworks are going to be as far as reports go. All right, let's take a look at all the currencies one by one. Let's take a look at cryptos quickly. We don't like the whole basket, so take a look at this chart. There's nothing to like in Bitcoin. There's nothing to like here to go long in Bitcoin. Take a look at Bitcoin Cash. There was nothing to be excited about a week ago, and now it looks even worse. So Bitcoin Cash, no thank you. Even Ethereum, that was really the superstar, It's rolled over. We're now trading below the 20, below the 50. Everything is looking bearish here. So there should be no buying of cryptos here. Not even looking for little bounces here. It's a terrible trade. Look at the bounces you're getting. They're not getting bounces. You're getting just bases. There's hardly any money to be made here. Don't try to go out and buy the cryptos here. Just let them come in, let them bottom out, and we'll grab them after. Litecoin looks the worst. So if you can go short cryptos, go short Litecoin. This one looks terrible. All right, next into Forex. So we talked about the dollar. Now this is our dollar basket. This is basically the dollar index, but equally weighted against all the other 7 currencies. Now, this is our proprietary basket we use, and you can see we have made some significant lows here. Significant lows. Here's a problem. We're now up against some significant highs. I'm going to take a look at the dollar here and say, hey, we are in this range, but if we can get a little bit of confirmation, I am ready to become more bullish on dollar here. Okay, what do you think is the most likely thing to happen to the dollar in the next week or two?
You know, I would say that as we are hitting the upper end of that resistance, I mean, this is the make it or break it point. I think overall we have seen very clean technicals. I mean, you can see the bottom, the support area. That was actually very consistent. 3 times we bounced off that level. And I think the same thing we can say for the resistance as well. So I think I want to give this a benefit of a doubt and say, well, maybe price will stall at that resistance. But I think that is the turning point. If we can get above that, which again, if you look at the candlestick, I mean, just one more big candle like that, we can get out of that. So I think at this point, I'm very cautiously bullish. But at the same time, not really looking to short it here as we are heading towards the top end of the range. I think this is the point to be cautiously bullish. And if we can get a confirmation that this is a confirmed breakout, I think then we need to switch our gears to more on the long side versus the short side, very similar to what we saw back in February. But we got that big move up. We based a little bit and we just continue moving higher. And that was a turning point, and we just started to go higher. I think this is exactly where we are right now, and we have to pay attention next week. Like I said, next week will be a week of confirmation that I will need in order to switch my outlook.
Yeah, I totally agree with that. I think we are like right there. It's not quite there yet. Now let's talk about the yen. We liked the yen short last week, and you can see at the first part of the week, the yen short was a great little trade here. However, we've bounced back. The trend hasn't changed on the yen. So we're looking at dollar thinking, okay, major trend change may be happening. We're not seeing that kind of price action here yet. If the yen moves up next week, then I think you have to start thinking about it and talking about it. But at this point right here, boy, I'm pretty much neutral on the yen here. I think the yen could go either way, up or down. Whenever I come across this, whereas a coin flip, I just don't trade it. I say, hey, you know what? If it's a coin flip, I may as well go bet on some NBA or NHL games or whatever. That's probably a more intelligent bet. So yen, we'll check back in a week and we'll have a better call on yen. All right, Swiss franc. We talked about this massive run we had in the euro currencies. And last week we said, okay, it's looking like it's over. So the Swiss franc found a real bottom here on Monday, Tuesday, Wednesday, Thursday. And then we actually traded up on Friday. This is a pretty good looking bull pullback. And this is a decent chart pattern. I had put all of the European currencies on the shelf last week, said, hey, I'm not looking to trade them. I think this run is over. I've got to put Swiss franc back on the possible trade list. This is looking okay here. Anka, what do you think about Swiss franc?
I mean, I agree. I mean, if we're looking at both the euro and Swiss franc is definitely leading the European front. So I think that's really where the relative strength is. We had a very healthy pullback, and I think this is where I'm at with some of the European currencies. That is this a time to buy, or is this a time to sell? Because again, we got back down to the 52 moving average. That was a very healthy, a little bit deeper correction. So I think the European currencies are at a bit of a crossroad here. If the money goes into the dollar, then ultimately I think then we don't see money going into the European currencies. But if the dollar take a little bit of pause, I think the European currency trade can be back in play. So I think definitely a point where it either is going to bounce. I mean, I would love to see this bounce, maybe go up a little bit, show us that if it's going to make a lower high or if it's going to, run up to the highs previously. I think right now I'm very hesitant to short. I would love, if I want to short some of the European currencies, I would love to see a sort of a bear rally to short into. But right now, this still seems like it will pull back to me. We haven't made a lower, we still made a higher low instead of a lower low. So still, the bullish pattern is still intact here. So going to next week, like I said, I would be looking for some bounces. But then ultimately, the test would be that if we make a lower high from here, or do we trade in a range back and forth? So that's where I'm at. I think I like to look at both ways for both the euro and the Swiss franc.
But I think if you really take a look at both of them, the Swiss franc looks superior. The Swiss franc only pulled back to the 20. It was a much shallower pullback. And if you believe that we are going to be risk off this next week, which I do, the Swiss franc is a better currency of safety. So I'm definitely thinking along those same lines, okay, we could get a bounce in your currencies, but I'm really only looking at Swiss franc because that is going to be probably the best one here. You can see the pound also had a pullback. We pulled back to our 20. Okay, this is better than the euro. The euro had a deeper pullback. So if I had to rank the European currencies, it would be Swiss franc number 1, pound number 2, and euro number 3. I think they're all going to move fairly close together. So I'm not even going to mess with number 2 and 3. I'm really just looking at Swiss franc here as a potential long. Check in on CAD, and then let's check out on CAD. As you can see, right in the middle of the range, there is no reason at all to think that there's going to be any substantial move. Anyone who tried to trade the CAD this week got chopped up. Don't trade currencies that are just going nowhere because you just get chopped up. Your stops get hit, nothing happens. Now, the Aussie was our favorite short this last week. And you can see that we actually had Monday, Tuesday, actually had a pretty nice rally up to this resistance point. And then at the end of the week, it ended up being a great short. I still like this. I think we're going down to the bottom of this level. I'm going into this week definitely the same way, looking for opportunities to sell Aussie. And then look at Kiwi. Kiwi said, hey, you know what? I want to try to break out. I'm going to show everyone I'm not terrible. And it got up to the resistance point, and boy, it got absolutely slammed. We're back down into neutral area, so I can't get super bearish here on the Kiwi. But any bounce, I would really like to short a bounce on the Kiwi here. Right now, it's looking ugly. Any bounce, I'd like to short Kiwi. So going into the week, I am looking at a few trades. I think that dollar, Swiss franc, pound, that's really where I'm going to be looking on the long side. And on the short side, right here, right now, the Aussie is my favorite on the short side. But the Kiwi's showing the most momentum. So my trades here are pretty simple here. I'm looking for dollar and Swiss franc long against Aussie shorts. That's really where I'm starting the week off, and everything else is going to have to develop after that. So with that in mind, let's go take a look at those potential trades. First up is Aussie dollar. So here we have the daily chart on the Aussie dollar. And you can see that we've got this big resistance point. We just hit it. And now we're coming down to the bottom of this level here. So we are range bound, but we got a whole lot of momentum. I think you can take a trade and say, hey, look, 66.40 down to 65.80. Now that is about 1%. That is enough for me to say, okay, there's a good opportunity here. But look, we've just had a lot of energy expended to the downside. What I would love to see is in the short term, I would love to get a bounce to sell into. So here's a 4-hour chart, and you can see a whole lot of momentum right here, right now. I would love to see just a couple hour rally, maybe back up to the 66.80 area, 66.80, and say, okay, you know what? Let me get a little bit better entry point than right here, right now, as we are likely exhausting ourselves at the end of this rally. So for me, Aussie dollar is the number one trade, but I'm really hoping that early next week we get a little bit of a bounce. Aussie bounces up, dollar sells off a bit, and then I can enter at a good price. Again, hopefully around 66.80 would be a nice little rally here. That would be a rally of roughly 0.2%. All of a sudden, that gives me now 1 2/3% of potential profit. And I'm getting a little bit better trade here. Let's go ahead and take a look at Aussie Swiss franc. Aussie Swiss franc is going to be similar here. Now remember, whenever you're looking at two currencies, we're looking at like dollar or Swiss franc, which one's better? And you ask yourself, I want to short the Aussie, but I don't know whether I should use the dollar or the Swiss franc. Now, what you can do is you can simply split the trade up, do half of your position size with Aussie dollar, the other half of the position size with Aussie Swiss franc. You could do that into where you're saying, okay, I'm eliminating the difference between dollar and Swiss franc. I'm just going to take them both. Or you can always just pair those two trades up. So let's take a look at dollar Swiss franc. And at this point, the dollar has more momentum for sure against the Swiss franc. We are reaching this resistance level. So maybe early next week, the Swiss franc takes the lead. I think that's a little premature to say that at this point, because the momentum is on the dollar side right now. So I'm starting the week Aussie dollar. However, if the Swiss franc does start to take the lead, I could switch over to Aussie Swiss franc. Ankit, is there anything you want to take a look at?
Hey, Rob, I want to highlight some of the things that we're noticing in the markets. And I think right now is a very important time to take a look at these tightly negatively correlated currencies and see like where's the edge, just like you said in dollar Swiss franc. I mean, take a look at it, Rob, if you want to pull up Aussie Kiwi. It's very important to take a look at these pairing right now, because this is where it tells us where the movement is. So we can see that, like, if we like the technicals on the Aussie dollar, but clearly in the past, for the past couple of days, the Kiwi dollar was a better short. And how do we find that out? We find that out by taking a look at the Aussie and the Kiwi. I think it's very important that we do that, because that is how we will be able to catch what's moving rather than finding a perfect technical setup. So I just want to highlight that if you want to pull up an Aussie Kiwi on a daily chart, I just want to highlight how Aussie Kiwi has been taking turns back and forth. And these candlesticks are quite big. I mean, take a look at that big candle there with the 4 candle down sticks, and then we got a big candle up. Is it going to have a follow through, or are we going to see a bit of a similar price action? I think as we go to next week, you want to keep track of this. Right now, Aussie looks like in the lead. Kiwi looks the weakest here. So I do like Kiwi as a short. But if something is going to change, this pair will tell us. And I think that's what we need to focus on. Rob, the same way, if you want to pull up Euro Swiss franc, we want to find out if the Euro is a better play or the Swiss franc. I mean, we can see that Euro Swiss franc, slowly and slowly, it is moving lower. So this is why we are leaning more towards the Swiss franc on the strength versus the euro strength. So let's say if I want to short, either the euro and the Swiss franc, I want to short the euro. And same thing, euro dollar. If you want to pull up euro dollar, let's say going to next week, we've seen a nice little turn that taken place. Look at that. We're right below the 50-day moving average. Remember, we just looked at dollar Swiss franc and said, you know what, it's sitting at that resistance here. This looks like a better looking chart. So I just want to highlight how, you can be trading something that's moving rather than trying to find the best setup. And that's very important. I mean, a day like today, the Kiwi basket is down more than 1%, but the Aussie basket is only down 0.18%. So clearly, it doesn't matter which Kiwi pair you had today was a winner. And I think that's something that you got to continue doing that going to next week, see which one is really moving. And whatever is moving, we want to pay attention to that. Rob, if you want to pull up euro pound, I think I want everyone to take a look at euro pound as well. Lately euro and pound is more in the lockstep here. So going forward, Are we going to see euro a little bit more stronger or a little bit weaker? So you can see that right now in the past couple of days, euro actually has been a little bit stronger than the pound. So, this is, again, I hope everything was moving around the same time, but it's not. Either one currency is moving and then that currency stops and it kind of goes in the other currency. So I think it's very important to take a look at right now based on this chart. It looks like euro is gaining a little bit. So how about we take a look at pound dollar? And if we take a look at pound dollar, it'd be like, hey, this setup seems like it's ready to run or ready to break lower. So let's take a look at that. I mean, it broke below the 20-day moving average, still has to get down to a 50-day moving average. So I think this is what I want to highlight is that either we diversify and maybe pick a half a position of each currency to go to short against the dollar, or we look at what's moving and use that time frame. And once that momentum is over, then we make a shift. So going to next week, we'll have to find out if which one is the leading and which one is lagging, and we'll want to pair them accordingly. Back to you.
And thank you, Ankit. And that's why we've been putting this on the end of every single currency room. Focus on the velocity scores and currencies in play. Now, Ankit just went through a whole explanation, but that boils down what he said in one sentence. Focus on the currencies in play. And right now, Ankit is exactly right. Aussie is better short than Kiwi sometimes, and then Kiwi's a better short. And it seems like they're flip-flopping. And then we have Euro sometimes better than Swiss franc. They're flip-flopping. Remember, these are usually highly correlated currencies. And so when one has a big outperformance to the other, it typically corrects. So that's what Ankit is saying is watch those pairs. So if you see, again, this week, the Kiwi did much worse than the Aussie. If you start to see the Aussie do much worse than the Kiwi, it tells you that it's going back to reversion to the mean. That they usually move together. Last week, Kiwi had a huge move. They're just simply going to be fixing that correlation, and that means the Aussie could be a potentially better short. So watch those currencies in play. Focus on those velocity scores. Now look, let me just sum this up by saying I don't love the market here. And I'm talking about the whole market. Now, I trade everything. I trade stocks, I trade options, I trade futures, I trade interest rates, I trade commodities, I trade Forex, I trade crypto. I trade everything. And right now, really over the last 3 weeks, sometimes I look at this market and I say to myself, yuck. I know that's not very technical. I can't really put that into words, but I look at the market and I just say, ugh, like I don't feel it. It's not great right now. And we're in this range bound of areas. There are always some plays that you can make, but I don't want anyone to lie to themselves and say, oh, this is a great trading environment, because it's not. This is not a great trading environment. And I've been pretty vocal over the past 3 to 4 weeks saying, hey, everybody, like this isn't the greatest trading environment. It's not the worst. I've seen worse, but it's not like we saw the first 3 to 4 months of this year. First 3 to 4 months of this year were great. We're just not there right now. So you want to be trading less. You want to be asking your trades to do less. Don't think they're going to go on a 3 or 4 day run, because that's just not happening at the moment. You've got to be more realistic. You've got to be a little bit tighter on trailing stops to take your profits when you get them, and be trading less. That potentially could change at any time, but we're going into the summer, and a lot of times seasonality patterns get us, and summer tends to be less volatility. It just does. So prepare for this may be the market we see for the next 3 months. And if it is, remember at Maverick, we trade the market in front of us. Whatever the market's giving us, we take it. We don't do anything else. We don't hope it's different. We don't pray it's different. We don't act like it's different. We say, oh, the market's not giving out a lot of pips right now. Let's trade less and let's be a little bit more moderate on our targets. That's where we are right now. Just understand, and then it will change. It might change in the summer. It might change in the fall. When it does, we'll open it back up and we'll have some great trading during those periods of time. That is it for the Currency Room. Thank you for joining us. Everyone have a great weekend. Goodbye, everybody.